Hello, and welcome to this week's edition of Tax in 10 with me, Rachel.desouza, and Andrew Robins. We are both tax partners in RSM's London office and have a wealth of experience in dealing with a wide range of private client matters. Your feedback is valuable to us, so do keep it coming, especially if you have thoughts on any topics you would like us to cover. You can contact us by email, and our email addresses are at the bottom of your screen. Now, Andrew, I was reading recently about how many buy-to-let landlords are struggling to make any income from their rental properties. And I remember, it really doesn't feel like it was that long ago, but everybody seemed to be piling into property because it was seen as a very surefire way of
Mm.
making money. So things have clearly changed, but what's happened?
Yeah, I have to say that property ownership as an investment never really made sense to me because when you look at the financial comparisons over the medium to long term, the stock market always outperforms everything else. However, I have to admit, when I talk to my clients, I always feel I'm in the minority because, like you say, most of them seem mad keen on property development or buy to let or some other sort of bricks and mortar
Mm.
investment. Um, The problem with this, of course, is that when circumstances move against you, it can become really unpleasant. At the moment, I've got clients facing just a perfect storm where interest rates are going up, to a big extent.
Mm.
Tax relief has been cut, and basically their rental property is hemorrhaging cash, and they're coming to me and saying, "Well, what should they do about it?"
Yeah, that's right. And matters are really not helped by the current state of the property market too, because when owners need to generate cash, it's generally not that easy just to sell up.
Mm.
And certainly, if you look at today's situation at a price that might be palatable. So I guess this leaves us in a really peculiar position, and at least with regard to residential property, because rents appear to be rising and rising quite
Yep.
significantly, but the property values themselves are actually falling. And I guess, all these issues mean that what we're seeing is a number of clients, an increasing number of clients asking about incorporating their rental businesses. But again, there seems to be this belief that it's easy to do and will provide the answer to all their prayers. But I don't actually think it's that simple.
No. And let's break this down a bit. Because the first question is, why is there such a cash flow problem, especially given that, like you said, rents are actually going up? And I think the answer to this is partly because mortgage costs and other fees are just outpacing rental income. And the other reason, which has been around for a little while now, is that tax relief on loan interest it's capped, it's restricted to 20%. And for a lot of landlords, where the net rent previously was enough to cover your mortgage repayments, you're now in a position where you're making a profit for tax purposes, even though you're actually making a loss in cash terms.
Yes, and of course, that's one reason why incorporation looks attractive.
Yeah.
Firstly, of course, the maximum tax rate in a company is 25%. But secondly, the company gets full tax relief on its interest payments. So there isn't this mismatch in the regard, in the same way that individuals have with the deduction
Mm.
restricted on their interest payments. But you might think that that means that everybody should just, again, pile in and put their rental properties into a company. But there is more to it than that. And the first problem seems to be is, how do you actually get the property into the company without triggering a large tax liability?
Yep.
Because obviously, by default, a transfer to a company is a sale. It's going to be treated as a sale at full market value. And that means capital gains tax on the increase in value of your property, plus potentially stamp duty, land tax. And let's not forget, that's a hefty whack now, because that can be up to 15%,
Mm.
in SDLT charges as well. So as there is, this is a sale to a connected party. It's not, being done in the real world, if you like. So there's no actual cash being generated by these transactions to cover those tax costs.
Now, there is an incorporation relief available for partnerships. And if you qualify for that, there will be no CGT or SDLT due. And I think that's encouraged a lot of people to try and claim it. Now, as a firm, I've got to say we are really skeptical about how many people really qualify for this relief. And I think in a lot of cases, you can expect HMRC to take a really close look when these incorporation claims are being made.
Yeah, I'm with you on that. I think there really are a couple of problems with incorporation relief. And the first one is, you have to be a partnership. And that means you have to be carrying on a business. So it's not enough simply to own property jointly, because you can only have a partnership if you are really actively involved in managing it. And most landlords, they just won't meet that
No.
definition. So if we compare two situations, so if my husband and I, let's say we jointly own 40 properties and we work full time, we manage them, we're actively doing work there. We're going out, we're collecting the rent, we're overseeing the repairs, we're finding new tenants. In other words, we're doing the job of generally of the managing agent. And then that really would be a partnership. We really are doing a business. But on the other hand, if we own a couple of properties and we basically sit back and collect the rent, then, that's not a business. That's just an investment asset. There's no business going on. So there's no partnership for tax purposes.
Mm.
And then the other issue we've got is for stamp duty land tax purposes in particular, there are really strict anti-avoidance rules. So even if you do have a business, you won't get the SDLT relief if the main person of setting it up was actually to allow you to avoid SDLT on incorporation.
Yep.
So incorporation relief is great if you genuinely meet the conditions. But the reality is most landlords just won't qualify.
No. And to round things off, it's not even always the case that having your rental property in a company is a good idea anyway. There certainly are tax advantages because of the lower tax rate and the full interest deduction, but that only helps if you don't need to take the money out. If you need to use some of the rental income to live off, then the difference between paying income tax on the rent and paying dividends or salaries is often not that big, and you're paying for the privilege of having to run the company itself on top of it. So I think the bottom line is that we're seeing a really painful process. The rental market is cooling down, and that I think is just a fact of life. It is possible for landlords to make money, but it's not the no-brainer people used to think it was. And to make it work, you actually need to have liquidity from other sources to carry you through. There's definitely tax planning that you can do to make things better, but you need to be really careful because the normal warning that if a solution sounds too good to be true, it probably is.
Yeah, I agree with you. Anyway, I think the upshot for me is that I'm glad I ignored the pressure to invest in property those few years ago. Now, on that note, do you have a recommendation for us this week?
I do. I'm going to recommend Denzel Washington, Equalizer 3, which is in cinemas as we record this. I mean, he is such a charismatic actor. And Equalizer 3, okay, it's a thriller, but he's in Sicily and it's gorgeous. The scenery is fantastic. He bumbles around looking like everybody's favorite grandfather, just being totally sort of charming and delightful. And then you upset him and he kills 7 people in the blink of an eye and goes back to being twinkly and charming again. It's just great. I mean, it's kind of mindless, but he's brilliant. It's really good fun. Equalizer 3, thoroughly recommend it.
Oh, okay. I think even I might go and see that one. So thank you for that. And thank you all for listening. And as mentioned, if you want to be in touch with us, please contact us on our email addresses. And we can be contacted at rachel.desouza at rsmuk.com or andrew.robins at rsmuk.com. Until next time.
Bye.